kickstart the show and start taking all of your stock related queries. But before we do that, the number that you can write to us at is flashing on the top of your screens as well as on your screens. Do remember to mention the buy price for the stocks that you're already invested in, and for the ones that you hope to invest in, do remember to mention the time horizon that you then have in mind for those stocks as well. Let's kickstart the show, start taking all of your stock related queries. And today on the show, of course, we do have Kunal Bothra as well as Dhwani Patel joining us. Kunal Bothra on the technical side, and Dhwani is also joining us as well. Firstly, the first query, Kunal, that I have for you is coming in on a couple of counters, 3 counters in fact. Varun Beverages, Prestige Estates and CESC, because Swati is holding on to 100 shares of each of these counters. What do you make of her holding at this point? What do you suggest she should also do?
Varun Beverages, Prestige as well as?
CESC.
CESC, okay. So I think out of these 3 names, I would suggest that Varun Beverages is what you can hold on to. CESC, the stock could be a bit more choppy. It's currently at 150 levels. It's broken below a major support, which is around the 170 mark. And post that, we've seen the stock falling by a margin of another 10%, 12% so far. But it still looks like the stock has not found its major support. That could be just about that 140 levels for CESC. So maybe slight bit of more pain left into the stock price. And same is the case with Prestige. The concern with Prestige is because the stock had risen exponentially higher from a point where the stock was at 400 to 2022 end to 23 start for Prestige, towards a point when the stock was at 2000 plus levels. So which means that now we are into that phase of a major mean reversion. My sense is that the stock could correct towards at least 1300 levels or even below that. So that could be the near-term outlook for these names. Continue to hold on to these stocks, but a buying price or an averaging price could probably arise once these stocks correct by a margin of at least 10% further from current market prices.
Alright, so that's the take coming in for all of those counters. Just a quick note for all of our viewers that today is the techie special at Buy Now, Sell Now, because we have 2 technical analysts. We have Dhwani Patel as well as Kunal Bothra. So send in all of your short-term queries and make sure that they are actually answered by our techies non-stop, because Kunal is here on a Tuesday, where it is a very rare occasion that you will see Kunal joining us on a Tuesday. But let me take this next query then, and this one is coming in from Nikhil, and he wants to know about Tata Motors. 20 shares at a price of 990.3 rupees per share, to be very precise, Dhwani. He's in loss right now. Should he go ahead and book loss or go and look at some other company for the longer term? What's your take, Dhwani, on Tata Motors? Because a lot of them looks like have burnt their fingers in this one now.
The kind of fall that the counter has seen, there was a lot of people who have been trapped into this one. On the higher side, we saw that once the 1000 mark was broken down, and then there was no stop for this particular counter. There was a constant roll down being seen over here, but on the weekly structure is where it's getting more interesting, because there's a support level around 690 where the stock adhered to, and from there we are seeing a bounce coming in. On short-term basis, we can definitely see this bounce sustain till 860 levels. So in my suggestion, hold on to it. Keep a stop loss on the lower side here at 700, and on the higher side, 860 is a level where one should look to exit.
That's a take coming in as far as that particular counter is concerned. The next one that we have, in fact, is coming in from Ramesh, who's writing to us from Bengaluru. Kunal, writing to us about Karnataka Bank, 2000 shares. Buy price was just about 60 rupees. What do you make of this particular counter?
Well, I think it's been an excellent chart for KTK Bank, Karnataka Bank. The stock moved from 40-45 rupees odd from 2020 towards 250 to 70 plus mark. Again, right now, like what we've seen for many of the stocks, it's also going through a patch of its own phase of consolidation correction. But I think since you've purchased at levels of 60 thereabouts for Karnataka Bank, I would suggest to hold on to the stock, because the stock over the last 2-3 years had seen a point where it moved from where it moved into a zone of 2x to 3x kind of a price appreciation. And if that repeats for the stock price, even after this phase of correction, I would believe that the stock should be able to comfortably surpass its levels of 275 plus in terms of the long-term targets. So since you are a long-term investor, I would suggest to hold on to KTK Bank.
Alright, every time you say KTK Bank, Kunal, the only thing that comes to my mind is ATKT, because when you're in college, that's something that you want to stay clear.
KTK Bank is the symbol for NSE.
Yeah, it is the symbol, but every time you say it, I kept thinking ATKT. I was like, oh my god, it's been years I've heard this word. But yes, Dhwani, coming to you, Indus Towers is the next query on. Pradeep has written to us, 2000 shares at a price of 355 rupees per share. He wants to know for the next 1 month, what's the outlook for this one?
course, this is one of the traders' favorite counter where you look up at short-term opportunities in this one. Definitely, yes, you should hold on to it. 355 is a level from where the stock has started its up move. In fact, the breakout came around 350 levels. From there, we are sustaining high in trade over here. In today's session, definitely are seeing a certain cut due to the market scenario, of course, where we are seeing cuts coming in all the counters over here. But the support level strongly lies over here at 347. Given 347 is holding out on the higher side, 400 is the exit price that one should look up at.
Coming in as far as Indus Towers then is concerned. Kunal, the next one that we have is also coming in from Bengaluru. Vignesh from Bengaluru writing to us about 125 shares of Motilal Oswal that he's in fact holding on to. 820 is the buy price. He wants to know if he should add more at this current price or hold on for 1 to 2 years. What do you make of this one then?
See, I would not suggest to add at current levels because it's just for the first time that the stock has started to see a major retracement, especially on the monthly charts where you've seen the stock falling from 1000 levels to now sub 800. My sense is that this correction should extend for the stock price both in terms of price as well as in terms of time. Difficult to try and pinpoint that at what price the stock would probably see a major support, but I would believe that say closer to 650, 700 zone is a zone where the stock should find certainly some bit of initial support levels. So not suggest to average out at current levels, but in case if the stock happens to come back into the zone of 650 to 700, that could be a point where you may consider averaging out.
All right, moving on then. This next one is coming from Ravi. He's writing to us from Vijayawada. IOC is the counter, Dhwani, 1,000 shares at a price of 132 rupees per share. What's the short-term target coming in for IOC? Very heavily dependent on the crude oil prices.
Yeah, absolutely. This particular counter, definitely, it's almost near his cost price right now, trading at the same levels. And in fact, in today's session also, despite the current fall going on, we are not seeing much of a impact coming on this one. Of course, it has given the day's high, and from that level, we are trading down in the session today. But the support level is definitely there when you're looking up at an intraday chart over here at 130 levels to 128 levels. So hold on to this one. And on the higher side, given that today's high breakout around 133 rupees 50 paise levels on the short-term basis, derivative data is where I would take more inclination to and suggest 138 to 140 of a target on this one.
That's a take coming in. As far as IOC then is concerned, Kunal, a couple of counters that Shekhar is tracking from Bengaluru wants to know the short-term view coming in for the next 6 months on two counters, SBI and Exide. SBI 730 shares in fact at a buy price of 250 rupees, and Exide also 460 at 460 is the buy price of 100 shares that he's looking at as far as this particular counter is also concerned. So what do you make of these two counters in fact?
So both SBI and Exide, I think they are quality names on the longer term charts. SBI, of course, undoubtedly one of the top names on the PSU banking lot as well as the overall large cap banking sector as such. So looks attractive, and my sense is that since you've purchased at much lower prices, you're sitting with a lot of buffer as well as cushion. So you can ride out this phase of volatility.
Very quickly on SBI because for Shekhar, the buy price is 730 rupees off 250 shares that he's talking about. Okay.
So I think even if your buy price is at 730, the stock price is slightly higher than those levels. I would still believe that it's a good stock to hold on to. As I was mentioning earlier, that this is a phase of extreme volatility in the markets, and it's possible that this choppiness may continue for say another few more weeks, few more months for the markets. But I think SBI is one of the strong stocks which you should hold on to as part of your longer term portfolio. Exide Industries, my sense is that the stock is now coming into a zone of extreme oversold charts because from 550 levels or thereabouts, which was the high made for Exide in the previous year, it's fallen by a margin of almost 40% to 45%. So I think at current levels of 380 or slightly below these levels, closer to 350, 360 mark, I think would be a very good territory where you may look to average Exide from a long-term play.
All right, so that's the take coming in on SBI as well as Exide. But on that note, we slip into a break on this edition of Buy Now Sell Now. When we come back, continue taking your queries. Don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now show where we get you answers for all of your stock related queries. It is the techie special right here on ET Now. We have Kunal Bothra as well as Dhwani Patel who are answering all of your queries. So let me continue taking your queries then. And this next query that I have is coming in from Sunny, and Sunny has wants your view, Kunal, on AB Capital. His buy price is about 200 rupees per share. He's not told me about a time horizon or so, but how is the chart looking for AB Capital?
Yeah, bullish on the stock from a long-term play. Yes, in the last, I think few months, we've seen the stock also correcting by a margin of more than 20-25% from, I think, 240 thereabouts towards the point when the stock has now come back towards, I think, around 180 mark for itself. So I believe that, it's a phase of the market correction where even the financial services name, the mid-cap stocks have fallen, sharper as compared to the large-cap names. But I believe that whenever the stock recovers, I think 200 could be a near-term target which you can expect over the very near term. My sense is that in case if there is a further dip, say closer to that 170 mark, you could probably look to average out so that you can bring your cost price lower towards 180, 185 zone for AB Capital.
Alright, and that's the take coming in as far as AB Capital is concerned. Dhwani, I'm going to come right back to you about PCBL because Venu, who's a senior citizen from Chennai, is writing to us about this particular counter. He's purchased this particular counter in the first week of January. Currently, he's sitting on losses. What should he do when it comes to PCBL then?
Of course, the counter has definitely not seen any gains coming in over here after that. And from there, we are seeing a constant fall coming in over here. In fact, on the dailies, the 200 DMA is also crossed on the lower side. And definitely a small bounce is seen in the past 1 week, but that's not here to sustain. On the higher side, the resistance clearly lies around 385 levels. So from there, we'll see the fall coming back again. On the lower side, for a short-term basis, 350 having broken down, further doors on the lower side will open up over here. So in my suggestion, exit out of the same.
So that's the take coming in on PCBL. Let's take this next one then. The next query is coming in from our viewer. I skipped the name, but Kunal, this one is for you. He wants to know that if you could confirm whether Nifty has made a dead cross over yesterday. That is means 50 DMA is broken below 200 DMA, and is it positionally bad for Nifty in a short time? I think this is like a Pachala lesson for me, the query itself.
Yeah. So I think that crossover has already happened for the index, and you rightly mentioned that it's 50 DMA crossing below the 200-day moving average. And we've seen historically that whenever that has happened, it's not resulted to the index yielding any kind of a major positive trends. But then you also have to look at this in the context of how the markets have been placed over the last 3 or 4 months. We've been going through an extreme amount of choppiness. We've corrected more than 3,000 plus points for the index from the highs. So, this could probably mean that maybe we could get to a phase where the index may just about get into a drag or a consolidation. So, I sense that even with this death crossover, assumingly, if the index doesn't fall much sharper, below say 20 to 500 mark, which is the first level of a very strong support, I think that would probably indicate that we may just get back into a time-wise correction rather than a major price correction.
Alright, then that's a take coming in. As far as the Nifty then is concerned, that's what the setup then looks like. Let's also take a look at the next query that is coming in from Venkatesh, writing to us from Indonesia. Dhwani wants to know about alkylamines, and the buy price is 2,340 rupees for 130 shares. What do you make of this counter as well?
Of course, in this particular counter, we've seen that the stock has not performed anything much. In fact, if you pull up a broader data structure over here, you'll be seeing that a top formation was made somewhere around 2021. And from there, we're constantly seeing a downward action coming in on this particular counter. So I don't see a respite coming in anytime soon over here. Short-term respites can definitely be there. Like for the current trend that is going on short-term basis, we can see a bounce coming in over here till 1965 levels. And from there, the further fall would continue. So in my suggestion, make use of this bounce. On the lower side, keep a stop loss at 1720, and on the higher side, 1965 is your exit price.
Some important commentary coming in from the NSE MD and CEO Ashish Kumar Chauhan at an event, saying that there have been some concerns on SME listings. They've seen some gaps in due diligence of a few IPOs, and also he's mentioning the fact that many SME listing pleas were withdrawn due to deficiencies and must not drop the guard in carrying out regulatory duties, is what he's saying. But yes, there are some pertinent points coming in on the SME IPO front. But let me take the next query then, Kunal. And this one is coming from Ghosh Dada, and he's asking a question which I think must be on a lot of people's mind right now. Does it make sense to go ahead and buy Zomato at these levels? Are these levels attractive, make sense, or do you think on the chart there is some scope of more downside?
But there's definitely more scope for the stock to head lower. Now, when you see such kind of an extreme volume-based sell-off which happened yesterday, today's move is another day where you've seen a higher volume day for higher volume sell-off day for Zomato. The stock opened with a gap down of I think 4-5% or 6% or so, and post that it went to an intraday correction coming back to almost 205, 207, 208 mark for Zomato. So that indicates that the stock has gone through a first round of selling pressure. Now that could mean that maybe the stock could be oversold on the short term charts. You may see a bounce, but that doesn't mean that the stock has established a bottom for itself. So you might see that phase where the stock would keep on bouncing, giving you those relief rallies from the deep oversold nature in terms of indicators. But the real bottom generally gets made at least 1 month to 3 months after the first round of a major correction. The stock has also fallen below its 200 moving average. That could probably increase the tendency of the stock to head on the lower side. So my sense is that don't be in a hurry to buy the stock just because it's fallen by 8-10% yesterday today as compared to yesterday. I think the bottom could be made sub the 200 mark at least.
Alright, and that answers Ghosh Dada's query, who's also a regular viewer of our show. But Kunal, the next one that we have is also coming in for you. Max Healthcare and HCL Tech are the two counters that Ravi from Chennai is looking at. Now, for Max Healthcare, the buy price is 1,188 rupees. And when you take a look at HCL Tech also, 1,561 is the buy price as well. What do you make of these two counters? Because he's not mentioned the number of shares that he's holding on to at this point.
So HCL Tech, of course, is one of the stronger names from the large cap IT stocks. I would believe that you can continue to hold on, but just be wary of potential cycle, because right now we're into that sectoral churn where every now and then one of the other stronger sectors, it takes a backseat, and then you see a round of profit booking. So there could be a point where the large cap IT names likes of HCL Tech, etc., they could get into some bit of unwinding pressure. But that should not deter a long-term investor, assuming you are one of them. And same is the case with the other stock also which you mentioned. That was other than HCL Tech, it was Max India. Yeah, Max Healthcare.
Correct.
So even for that stock, 1,085 I think is where the stock price is for Max Healthcare. That's a stock which is also looking attractive, has done reasonably well, and I think so far at current levels it looks attractive.
All right, so that's the take coming in on Max Healthcare as well as HCL Tech. But just moving on then, the 55th edition of the annual World Economic Forum is all set and it is at Davos, Switzerland, where more than 3,000 leaders from across the geographies and industries are convening for the meeting to discuss important regional and global issues. With the theme of this year's edition set to be the collaboration for the intelligent age, the forum will touch on topics such as managing a fair and equitable energy transition, boosting growth to raise living standards, as well as reacting to geopolitical shocks. The venue is full of bustle and energy, given the fact that it is hosting more than 350 government leaders, over 1,600 business leaders, and more than 170 leaders from civil society and the social sector. Amongst these names is India, from which 6 states, namely you have Andhra Pradesh, Uttar Pradesh, Kerala, Maharashtra, Telangana, as well as Tamil Nadu, that are showcasing their regional success stories and investment potential. This all under one roof in the India Pavilion. So stay tuned, as Times Network will bring you more interesting insights and glimpses from the World Economic Forum 2025.
As we slip into a short break, let's... Welcome back. Thank you so much for staying tuned in. Time now to continue taking all of your stock related queries. The next one, Kunal, that we have is coming in from Rema, who's writing to us from Bengaluru. Wants to know about HDFC Life, 175 shares. Average price that she's purchased the stock is 620 rupees. What do you make of this counter then?
Hold on to the stock as of now. So I think when we look at the recent major lows for HDFC Life, 2023 when the stock was almost at 500, 2024 mid somewhere when the stock was at 550, and the recent low for the stock around the 600 mark. All three of them are joined by a major trendline support, and it's apparently at those levels of major trendline support where the risk reward looks very attractive for long-term traders or long-term investors to buy the stock. So since you've purchased at current levels thereabout for HDFC Life, I would suggest to hold on to the stock as of now. And looking at the cycle in terms of the last 2-3 years of price uptrend, I think the stock from current levels, say over the next 12 months to 18 months, should come back to that 700 to 750 zone at least.
All right, so that's the take coming in on HDFC Live. Well, let me take this one with you actually, Dhwani. This one is coming from Shanmuga Sundaram. He wants to know about M&M. He has about 100 shares at a price of 3,000 rupees per share. He wants to know, does it make sense to add some more right now in this portfolio?
I would not suggest adding on to this particular counter at these levels for the reason being that we are constantly seeing that the stock is trading into a consolidated range. In fact, if you look up at the tops that were made in October 24 and the same tops were retested again over here in January first week, though the bottom formation is strongly there over here at 2600 levels. In my suggestion, if you're looking up at a broader perspective over here, 2600 is a level where one can add on to in this particular counter. For now, wait and watch. Keep a stop loss also strictly over here at 2600 levels.
Alright, then that's the take coming in. As far as M&M then is concerned, Pavitra from Bengaluru, Kunal is writing to us about three counters: Dixon Tech, Maruti Suzuki and Reliance. Dixon Tech and Reliance are both taking it on the chin at this point. What do you make of all three of these, in fact?
So I think Maruti and Reliance could be a very good buy at current levels. My sense is that I think from the large cap names, a major part of the correction seems to be behind into these names. Now, yes, there is possibility that over the next 1 or 2 months, these stocks may come back to retest of the previous swing lows. But I think that would also be a very good opportunity to average further for these large cap names, because rarely do we see a point where these large cap stocks correct by a margin of 30%, 35%, and so. These points apparently on historical basis have always been classical points where buying or averaging out have actually rewarded long-term investors. So I would suggest the same for Maruti as well as Reliance.
All right, so that's the take coming in on Maruti as well as Reliance Industries. Let me take this next query then, and this one is coming in from Rajiv, who's writing to us from Kolkata, wants to know about REC. Buy price is 510 rupees per share, and this viewer of ours, Dhwani, has a long-term time horizon, about 4 years or so for REC. Do you think it makes sense to stay put with REC for that longer period of time, as well as what sort of other strategy can the viewer actually adopt, given the fact that the buy price is 510 rupees? Dhwani, I believe
In the
you...
same space, we have a couple of counters trading in over here. When you're looking up at PFC, REC, these are one of the few names that come to your mind when you're looking up at the power sector. REC, definitely, yes, it's a hold coming in from a broader, longer time period horizon over here. And from current levels also, definitely there is a fall that we are seeing over here. But the support level is at 405 levels, 405 being holding out over here. One can also average into their position at these levels and hold on for a broader perspective.
All right, so that's a take coming in as far as REC is concerned. But Kunal, I wanted to also come to you. Do you also concur when it comes to some of these power financier names? Any other name that you're looking at except REC then?
I think, of course, I'm very bullish on PFC, REC. My belief is that these stocks rarely provide a opportunity of a 40% kind of a correction, and we've seen that happening for both PFC as well as REC. PFC, for example, the stock was almost at 580 levels. Some time back, and the stock has come back to that 430 marks with sharp 150 plus point correction for the stock, and same is the case with REC in terms of the price correction. I strongly believe that these are classical buys from a long-term portfolio approach, but you also have to be very cognizant about the high beta nature of these stocks, because there comes a point when these stocks rally up 10, 15, 20% in a matter of few weeks or a couple of months, and then there also comes a point when these stocks correct by that similar intensity in terms of 10% to 20% in a matter of 2-3 months. So that's the only point you have to be a bit cognizant of, which means that buying on dips or averaging on dips could actually turn out to be a much better strategy, and especially if you have a long-term time frame, which is 4 years plus.
All right, so that's the take coming in on power financiers as a whole. This next query that I have, Kunal, is coming in from our viewer Sai Kumar from Vizag. Wants to know about Infosys. 30 shares at a price of 1,311 rupees per share. Wants to know whether he should go ahead and book profits, and with that amount, should he actually go ahead and invest in Zomato?
Well, as I said, that potentially Zomato can see a further correction, and that typically happens when stocks show a negative price action, especially just around the result season, and when stocks show gap down opening and then they fall sharply on the back of higher volumes. That generally results into the stock remaining under pressure for 1 to 3 months. at least. So you should not be in a hurry to try and buy Zomato at current levels just because the stock has fallen by a margin of 10-12%. Yes, it may see a bounce, as I mentioned earlier, but then eventually I think the stock should settle sub the 200 mark.
Rather than Zomato is the one to look at because that is the stock that has been also tumbling in trade. We've seen quite the reaction coming in when it comes to this particular counter based on that commentary as well as their results. But you do have brokerages, select few brokerages that still remain bullish as far as that stock is concerned. In fact, let's also take a look at the next query that we have coming in from Dhanush, who's writing to us from Bengaluru. Dhwani wants to know about Adani Green Energy. 250 shares, buy price is 1,298 rupees. What do you make of this counter?
Yeah, of course, that's a hold coming in on this particular counter. Though we have definitely seen a certain correction coming in over here, the base formation strongly stands around 850, 870 broad range. And from there, we are seeing a bounce coming in over here. His buy price is definitely at the lower side. He's already into profits right now. I would suggest hold on to this one. If you're looking up at a longer term perspective over here, definitely there would be some amount of gains also that you would see on this particular counter. On the higher side, given on the short term basis, we break 1130. From there, you'll see a bounce coming in till 1500 level also in this one. And from current levels, keep a stop loss strictly on the lower side at 880 levels.
All right, so that's the take coming in on the counter. But on your screen, as you can see, you have the SEBI chairperson who's talking right now. Let's head across and hear her what she's saying.
Respect for the spirit of the law, this respect for what is right and good for the investor. We have a large number of icons in our market, many companies, many financial services companies, many listed companies who are our role models. So it's not as though we have to invent this. We already know how it's done. We just have to decide to follow those role models. Personally, and many of you know that I speak to the market very, very frequently, I've been noticing a subtle shift in the way that listed companies, their promoters, are thinking about not just their companies, but about their lives. And as there has been a passing of the baton from first generation entrepreneurs to their next generation, I find that a number of them share their thoughts about how they want to run their companies, but more importantly, how they want to live their lives. It seems to be an emerging theme.
Welcome back. You're watching Buy Now, Sell Now on ET Now. And if you look at the markets, a very good, steady recovery actually underway. When you look at the benchmark indices, there you go. You've seen a sharp spike the last 10 minutes or so. In fact, we are nudging the positive territory when you talk about the Nifty. We'll need to actually figure out what this sort of a spike can be attributed to. But yes, a good, healthy recovery coming in for the markets, be it the benchmark indices, Nifty, Bank, or let's take a look at what the broader markets are doing, and if there's a recovery in broader markets as well at this point in time. The broader markets as well recovering, but not as much as the benchmark indices, but nevertheless a good recovery, healthy recovery coming in for the markets. But let's put the spotlight on Sterlite Technologies, because the company has announced its quarterly earnings, where you've seen a dip in the revenue on a year-on-year basis. 4.6% is a dip on a year-on-year basis for revenue, but the margins have bettered on a year-on-year basis. The losses have also reduced when you talk about the company. So we have Ankit Agarwal, who is the managing director at Sterlite Tech, joining us on the show. Hi Ankit, a very good morning to you. Thank you so much for joining us on ET Now. And let's talk about your financials and exactly what led to that revenue decline, as well as if you could help us understand what exactly contributed to the reduction in your losses as well.
Yeah, absolutely. Thank you for having me on the show. So I think 2 or 3 things. One is definitely from a driving perspective, the optical business is our key driver. As we've been sharing over the last few quarters, we have seen some slowdown in North America in terms of new demand, particularly in terms of inventory, which had built up. So as we see that inventory starting to get reduced quarter on quarter, we are quite confident that the volumes will start coming back up. We've already started seeing a pipeline of opportunities, pipeline of bids increase in that market, and similarly in Europe as well. So we're quite confident that our volumes will come back up. Broadly, we've been operating at between 45-50% utilization. And we're very confident that once we go back to about 70% utilization, Our EBITDA margins will go up from about 12%, 13% to almost 20%. So this is that period that we're in the transition period. And as our volumes increase, both on our cables as well as connectivity, you will see that improvement in profitability. And the second part is on the services business as well. We are seeing very, very strong pipeline of opportunities, both on system integration as well as fiber deployment. We have already secured about 2,600 crore project in Jammu Kashmir for BharatNet Phase 3. And as that APO gets released to us in the next few weeks, we'll see how to execute that in the coming next 3 years.
Right, Ankit. So you did speak about the profitability and you are expecting it to happen. Any roadmap or any timeline that you're expecting to hit that profitability mark?
No, as I said, it's just a function of now making sure we work very closely with our customers in terms of product development. We now have more than 700 patents. And also at the same time, we work very strongly in terms of our cost reduction initiatives, which you'll see in the numbers in terms of fixed costs. So I think across the board, we are well set up now. And as the demand continues to improve, which we are seeing in the market, we do expect that quarter on quarter, the profitability should improve and then stabilize at that level.
And that's the take coming in as far as improvement in profitability and the momentum there is concerned. Ankit, this is Shreyansi as well joining the conversation. I also wanted to quickly ask you about your growth levers then. Where do you see growth coming in from? What are the catalysts that you're marking out when it comes to growth then?
Yeah, absolutely. So if you look at the global optical fiber cable market, this is expected to broadly grow between 8 to 10% CAGR over the next 5 to 7 years. In addition to that, just North America itself is expected to grow north of 15% every year for the next 5 to 6 years. All of this is really on the back of 3 to 4 major trends that we're seeing. Clearly, 5G requires massive amount of fiberization. Connectivity to the tower has to be north of 80%. So that's something that will clearly play out over the next 3 to 4 years. The next big driver is in terms of demand is both fiber to the home and as well as rural connectivity. So these are very, very important trends where we're seeing massive projects like BEAD projects in the US is $42 billion. BharatNet out here is north of 1 lakh crores. So similarly, like that, every major country, Germany, for example, is looking at huge connectivity in rural Germany. So that's the second trend. The third big trend we're seeing is data center and the whole massive influx of AI that we're seeing. This is leading to a complete redesign of data centers, which are requiring a lot more fiber optics within them and connecting the data centers, AI-led data centers within a campus. So this is also the third big trend, which will lead to a huge amount of requirement of fiber optics. And of course, overall, we are seeing that in other applications like oil and gas, defense, etc., we're seeing also an increased demand. So all of this should come in over the next 4 to 5 years. And then, of course, 6G is something that will get factored going forward, probably 29, 2030 onwards. From our perspective, we are clearly seeing this segment, DC plus enterprise, also as a growth segment. And we've just shared that north of 20% of our revenues in the current quarter came from the DC and enterprise segment as well.
Exactly. I was going to ask you about those segmental breakups, and nevertheless, you did answer that, Ankit. But since there's paucity of time, I'll just club two questions to you. One, I wanted to understand your capex plans going ahead. And also, you have an order book of about 9,050 crore rupees. If you could tell us from where these orders are flowing in, which segments, and which one do you think will better on, or in fact, contribute more to your revenue as we go by the year?
Yeah, so currently our open order book is north of 1,000 crores or 9,000 crores. And this doesn't include our BharatNet project, which we have won, which is about 2,600 crores. So I think a fairly healthy order book pipeline that you see. This is clearly going to be a mix of, telecom segment, defense segment, as well as this enterprise and data center segment that I spoke about. Very, very focus for us now will be very clearly in terms of the utilization of our assets that I spoke about. And then clearly from an investment perspective that you asked in terms of CapEx, a large part of our CapEx and addition has been done over the last 2 to 3 years. We're very well set with almost 50 million fiber kilometers of glass and fiber capability and almost 45 million of cable facility, including our latest facility in the US. So I think our CapEx spends will come down significantly from historical 400-500 crores to maybe 100-150 crores. And very marginally where we need to invest, for example, in our cable accessories and interconnect solutions, maybe there we'll do some small investments. But by and large, the focus is now to utilize our facilities, generate cash, and reduce the debt on our balance sheet.
All right, then focus Focuses on cash generation as well as reducing the debt on the balance sheet as well. Thank you so much, Ankit, for taking time out and joining us today. Paucity of time, but thank you so much for getting us that take coming in on the earnings fine print as well as the growth roadmap. But with that completely out of time, on this edition of Buy Now, Sell Now on ET Now, don't go anywhere because Markets at Noon takes all of the action forward.
If you like this video, then like, share and subscribe to ET Now.